Hello and welcome to another update video about VeChain. VeChain is currently clearly also in a correction, in a corrective pullback. I want to share with you my alternative and primary scenario. Well, we start with the primary scenario, of course. So that would be the white count, actually. Okay, so we have two scenarios here. Obviously, it's clear that the price is overall in an uptrend, but within that uptrend, we are getting a correction. And it seems that either just this element gets corrected, so basically just this rally here, which took place between end of January and the February highs, or the entire move already gets corrected, so that all of these 5 waves here got corrected. It just depends on how we count it. It's not crystal clear. The blue count suggests that all of this was a leading diagonal, which is technically absolutely valid. It is clearly a 5-wave move as well. However, we've had it many times in crypto now that the initial move up of what looked like a diagonal was simply an ABC structure, which we can call an A wave. Then there was a B wave pullback, which was very shallow. And then a C wave rally started, which is a 5-wave move. 1, 2, 3, 4, 5. And I think, honestly, both scenarios need to be considered. First of all, they are both bullish. I think that is very important. The thing is only that in the white scenario, in which we are dealing with this more aggressive bullish scenario, we have a 1, 2, 3, 4, 5. It is really difficult to say which one it is. I'm leaning towards the white count until I have further evidence for blue. The blue count suggests a much deeper correction, but to be honest, even in the white count, we have more space to correct. Could technically come down to 2.95 cents without, let's say, invalidating or even, well, without even risking invalidation, because below the 78.6 Fibonacci level at 2.95 cents, we would see it with a higher probability that the blue count is unfolding, yeah, because then we have an overlap between both support areas as well down there, with the lower one starting at 3.2 cents and going all the way down to 1.8. So you could see it as a large support area and just scale into the pullback. Just note that below 1.8 cents, there isn't really anything clearly bullish anymore about this chart. Or you just say, okay, you're observing the chart, and once you see a first impulsive reaction to one of these Fibonacci levels that are on the chart, like, for example, 3.7 cents, 3.37, 2.95, 3.18, 2.7. If you see an impulsive reaction to one of these levels, if you then watch for the subsequent pullback, then you can set a tight stop below that beginning of an impulse. So they're just different approaches. It is depends on your, do you want a rather casual approach? Then you could just scale into these support areas. Just be clever about your position sizing. You want to be very small the higher you are. Remember, in crypto we can make a lot of money with little input, and as long as we are catching the falling knife, because that's essentially what it's doing. It's coming down, right? Price is coming down at the moment, and we have no confirmation that a trend reversal has happened already in these support regions, which means that we have to still expect lower prices, okay? So there are some additional levels that we can watch. For example, the ascending trend line here on the chart. It's not crystal clear because up there I've got this unreliable wick, but okay, we have at least a few touch points, and then obviously we use that as a parallel trend line. So we have just a channel. Not entirely sure if we actually get there, but we could do. And the yellow, certainly the upper yellow support area, allows for the price to come down to that lower boundary line of the trend channel. Either way, I have absolutely no evidence that a low has formed, but I'm leaning towards the white count, which should suggest a lower correction, just because we're currently holding above that support area, yeah, and it doesn't make a difference because I'm going to watch for lower prices anyway, yeah, regardless of scenario, until I see a first small impulse to the upside. But what would happen ideally is in the white count, obviously an ABC structure, correction in a wave 2, and then a rally. In the blue count, this would be an A wave down only. We would get a B wave rally, and then a C wave down. So in both scenarios, ideally, we see a reaction from the upper support region, which is defined between 2.95 cents and 4 cents. And even if it's a corrective rally, if the market makes those profits available, it might be reasonable to take some partial profits. And then, if the C wave down happens, it might be reasonable to add again. So that's sort of how I see VeChain at the moment. What we can do as well, based on the structure that we have here, this ABC structure that you see in white, we can calculate a target for the C wave a little bit more precisely, in that we take the length of wave A to the downside, then we go to the high of the B wave, and then we're looking for relevant Fib levels. And typically a C wave reaches the area between the 100% extension level here at 4.06 cents, which was reached already, and the 1.618, which is at, no, 1 second. No, 100% extension was 3.98 cents, and the 1.618 is 3.25. So it's an additional area of interest, and there's some Fibonacci confluence around 3.7 cents as well. So yeah, there should be good support actually. I mean, if not, then it's more clearly the blue count. In a correction, we can never really say in advance how exactly it is going to unfold. That is much easier in an impulse. But I see this here as a counter trend move, basically just a pullback in an overall uptrend. And there is currently absolutely no evidence that a low is in, but I gave you the relevant parameters to watch. So that's my update about VeChain. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.